A once-in-a-lifetime event we've seen over the last few days, and that is the collapse of commodity prices and the bounce back of gold and the bounce back of oil. In the last couple of hours, in the studio with me is portfolio manager at Miton Optimal based in Cape Town. It's Andy Pfaff. That oil price is an amazing story. I think everybody knew that OPEC was going to say, no, we're going to try and stuff up the market, or we're going to keep our production where it is. But when they saw it in black and white, then the thing just plummeted.
Lindsay, I'm glad you use all the technical terms that the traders use. Yes, it was funny. The gold price was similar. There was nothing new, and there was no new information. We all know the old expression: if it's a falling market, you sell on the rumor, buy on the fact. And
yes.
Then the fact came out, and we kept on selling. It was like someone hadn't been paying attention. We saw the same in the gold price with the Swiss referendum that didn't go through, and after the news, everyone knew that was going to be a no. And after the news came out, off they sold the gold price as well.
Yeah, Nazipa, the gold price this morning was sub 11.50. It's now 12.10. It's up $52 on the day. Extraordinary.
Well, with all that volatility, I only have one question for Andy. How do you make money from this? We've seen the global aviation stocks soaring, excuse the pun, on the back of that oil price. How do you make sure that you position yourself to win?
You know, as low as interest rates are, sometimes it's about return of your capital, not return on your capital.
Do you buy logistics companies? Do you buy airlines? Do you buy, I mean, this is what she's really asking here. Do we buy Sasol because it's so beaten up? We need to make some money. We've had a very nasty tweet from someone in Zimbabwe saying, stop talking and try and make me some money. How do we do it?
You can buy the bounce, but don't go sleep long.
Buy the bounce, but don't go to sleep long. There's a hedge fund manager in Joburg. His name is Rowan Williams. You must have been having some fun over the last week or so, Rowan.
Certainly there's been a lot of volatility, and I think if you had a particular view, like you said, it seemed like a high probability that OPEC would decide not to cut production, and hence you could position yourself accordingly. I have seen interesting comments saying Sasol at these prices is discounting either the rand at 9 Rand 50 to the dollar, which is sort of dream stuff, or otherwise, oil in the 50s. I mean, is Sasol sort of fundamentally, given even lower prices, is it still a good investment at these levels? What's your view, Andy?
No, this is outside my space. I look at the commodity only, not the resource equities. So.
But let's look at let's concentrate on the oil price, and Rowan can make his own mind up about where the rand's going to go. So have a look at the oil price now. It's fallen precipitously from 115 and a bit to, I think, below 68 at one stage over the last 48 hours of trading. It's got to stabilise a little bit, and Sasol has got to bounce back from a 7% fall today. But longer term, what do you think?
Look, we've had. We know, if we just step away from the noise a bit, in every market we get price makers and price takers. For the last 40 years, or since the oil shocks of the 70s, the producers have been the price makers and the consumers have been price takers. That has changed now overnight. That's changed with the advent of new production of oil out of the US. But the price is adjusted to that new recognition in the last 3 months.
Yes.
We know there's an old saying that markets take a lot longer to respond to known events or known conditions, but when they do change, they change faster than we expect. And that's exactly what we've seen. This is not new news.
Nosy, just end this with that. I mean, the market's has done something that it's taken years to build up. It's done it in 3 to 4 months to the downside.
Just a quick one to wrap it up from me, Andy. Earlier this year, I think it was a month or so ago, we had OPEC coming out saying that they're forecasting, $110 a barrel for the next decade. We've got other analysts saying that the oil price will go as low as $40 per barrel. Where do you stand on this? Where do you see stability? At what price do you foresee stability for the oil price?
I don't see stability, but I think the consumers are the price makers now, and the producers are the price takers. I think that those roles have changed.
In other words, we're going to see the market bouncing back and playing a ping-pong game between maybe 50 and 80. But it's we've got to get used, I think, Nosy, to a low oil price world in the future.
I am filling up on fuel. I think you said midnight Tuesday. I'm there in full tank. I'm certainly going to be reaping the benefits of this lower oil price. And that's it for Investment 360. A very big thank you to Andy Pfaff in Cape Town with Lindsay. He's a commodities fund manager at Miton Optimal.